We are going to be talking about non-QM product, well, one specific non-QM product. And today and the next 2 weeks, that's what we're going to discuss, are non-qualified mortgage products. Non-QM stands for products that are outside of Fannie Mae, Freddie Mac, HUD, or VA, all right? It's the niche product. Sometimes you'll hear Mike talk about them as private label products, all right? That's what's there. What's that?
He'll talk about subprime as the language.
Well, they don't want to use that language. Although I will tell you, I'm not going to be talking about it over the next 3 weeks, but there are some products coming out right now that they border that same stuff. So it gets you get a little dicey when you start seeing and start hearing some of this. I'm thinking, did people already forget what happened in 05, 6, and 7 that led to 8, 9, 10, and 11? So what I'm going to talk about today, though, is an outstanding product, and it really is a good product for self-employed borrowers. I mean, and what I want you to think, I'm going to give you some product parameters, and then what I want you to do, you and I together, is take a look at how does that benefit you and some of your clients to help you get more business. So it's called the bank statement loan, and most lenders who are doing the bank statement loan will call it just that, bank statement loan. Now I'm going to give you some general parameters on it, and then we're going to go into some variations, and then how do you market this product. And you don't have to know all of this. All you have to know is that it exists, but I want to give you some basics for it. So first thing on a bank statement loan, every investor that I'm doing the business with requires that the people are self-employed for a minimum of 2 years. So we have to prove self-employment. So the bank statement loan does not work for somebody who's a W-2 employee. That's not going to fly. Has to be somebody self-employed. That's parameter number one, which is a good thing. My only nervousness is at some point in time, I think they're going to change that. I hope they don't, but they might. You know, a bank statement loan fits self-employed. Why? Many self-employed borrowers have lots and lots of income coming in, but the nature of their business and being self-employed, they write off a lot of income. Meaning that they might be making $15,000, $18,000, $20,000 a month, but after expenses, they're only showing maybe $5,000 or $6,000 a month. In a case like that, you'd say, well, then I can't get you the $600,000 home that you want to buy. So this product says, let's take a look at how much money you're depositing into either your personal account or your business account. Let's just focus on personal account. So that's what they're going to do. They're going to look at 12 months personal accounts, bank statements, or 12 months. And they're going to look at all the money that's coming in during that 12-month or that 24-month period of time. And then they do a calculation to determine how much of that is actual income. The general rule of thumb is 50% of whatever that income is going to get wiped out for expenses. Now, if you run a business that has less than that, there's ways we can go about showing that so that if it's only 30%, we might be able to do that. But a rule of thumb is whatever income's coming in, whatever deposits are coming in, we're going to take 50% of that, and that over that period of time, 12 months or 24 months, and then give you credit for that income. Well, all of a sudden, what that does is that opens up the borrower to an ability to be able to buy something they wouldn't otherwise be able to buy. I mean, if they show $20,000 a month going into their account, and on their tax returns it nets out $5,000 a month, well, if I'm going to give them credit for 50%, that's $10,000 a month. The house that you can buy on $10,000 a month in income is a lot different than the house you can buy with $5,000 a month of income. So the bank statement loan gives you that kind of flexibility. Now, there are some things you can't buy. I don't know any investor, at least I don't have any investor that does it a loan less than $150,000 with the bank statement loan. But you can go up to $3 million or up to even $4 million on a bank statement loan. There is a 12-month bank statement loan, meaning we're going to look at 12 months bank statements. There's a 24-month bank statement loan. We can either look at your business account or at your personal account. We can look at either one of those two accounts. Now, if in fact we're going to use your business account to verify how much your deposits are, then you have to own at least 50% of the business. If we're going to look at your personal account, you only have to own 25% of the business. So again, some of this, and again, you're not going to remember all this, that's okay. I have a hard time remembering it all. So, but it's good to know, have a ballpark idea. How much of the business do you own? 50%. Okay, good. I can use, your income out of your business account versus having to use it out of your personal account. That helps. Now, I've just said we got 24 and 12-month bank statement loan. One of our investors just recently came out with a 3-month bank statement loan. Goes to what you and I were chatting about just a moment ago. That to me is uncomfortable, but it's not my rule. So if somebody can only verify 3 months bank statements, they can get the loan. Now, they have to meet certain parameters. On the 12-month and 24-month, we can do 10% down, 90% loan to value. Certain loan amounts, it's got to be more than that, but your basic loan amount, just 10% if that's what they want to do. By the way, 10% down, no mortgage insurance. All right? Now bear in mind, you're not going to get this at a 3% interest rate either.
What's the interest?
So the interest rates go up depending on the nature of all the things that go into your loan. If your loan to value is a little bit higher, then the interest rate's going to be a little bit higher. If you're doing the 3-month versus the 12-month or 24-month, it's going to be a little bit different. So, but overall, it's not bad. I mean, I priced one out for somebody the other day, and it had a 1% loan origination fee on it, no discount points, and the interest rate for them, there was a 24-month bank statement loan, and the interest rate for that person was going to be 3.75%. That's not terrible. That's really not bad. So,
origination fee,
the origination fee is 1% of the loan amount.
is that just for those kind of loans? Or
No. It varies. Like I priced out a loan for somebody, a similar loan, not the same one, but a similar loan last week. The starting interest rate with 1% loan origination fee and 1.5 discount points. That's 2.5% on the loan. The interest rate on that was 4.5. Now, if he didn't want to have any origination fee and no discount points, the interest rate would have been 5.75. So it varies. So there's options. But as you can tell, interest rates are going to be a little bit higher. So, let's see. The bank statement loan that we're offering is all 30-year fixed. We don't have a interest-only product on that yet, although I hear it's coming. This can be done on owner-occupied, second homes, and investment property. But when I talk about investment property, I'm going to save it for next week. There's an investment property product out there right now that is like, seriously?
tell us.
No. Just be here next week, Monday. It's unbelievable. It's kind of crazy, actually.
Good pricing?
What's that?
Good pricing?
Depends who's asking.
No, pricing's not good. But
Good crazy. Like, is this product?
good crazy, yes. It's good crazy. It's a little bit nuts that they actually would give you a loan like this. I mean, let's put it this way. That particular loan, anybody in this room could buy an investment property tomorrow on that loan.
Really? Let's do it. Sign me up.
Sign you up. Oh, yeah. See, that's what makes me scared. Like, I'm thinking, did we forget what happened in 05, 06, and 07? Did we forget about that? The bank statement loan is also good for non-warrantable condos. Everybody know what non-warrantable condos are. Condominiums that cannot get a Fannie Mae, Freddie Mac, FHA loan. That's warrantable. These are non-warrantable. You can use the bank statement loan to get non-warrantable condos, which is important. On the bank statement loan, just again, interest rates will vary on this, but take a stab at what you think interest rates might be, or not interest rates, but credit score requirement. What do you think the bottom would be for a credit score on a bank statement loan?
640.
640, 680, 680, 600. I'm like, seriously?
So, quick question on
Yes.
that. So if it's a non-approved FHA community, can this product, then get in it? Like
Yes.
another town?
Yes.
So
If not one-
that's a good workaround.
Right, it is. Thank you, Tom. It is a good workaround. Now, bear in mind, it's not going to be in the 3s for the interest rate. Probably isn't going to be in the 4s for the interest rate. If you've got a credit score of 610 and you're trying to do one of these products, you're probably going to have to put down a little bit more money. I said 90%. You might have to do 25% down because that varies with the product, with your credit score. And then interest rates are going to be different. So the idea for you and I is that this is available, but I can't go and quote you. I can't just, you can give me basic parameters, I quote your rate. Can't do that. I've got to look at the loan, plug it in, and it'll come up and give me what the rate is because so many factors come into play. But again, for you and I, think about this. Self-employed borrower wants to buy a second home, has a lot of income, credit took a beating a few years ago and it's only at 640. They've got enough money to put down. Heck, they can put 20, 25% down and they can show enough money going through their bank account, but they don't have it on their tax return. You and I have the product for them and they can go buy a house. Now, that doesn't mean they should go out and buy the house until they go through the loan process. Trust me. Because if you call me up and ask me for a pre-approval letter on this product, I will have to have all the documentation, not just a portion of it. Because we're not taking any chances. I'm not putting my name on something that I know is shaky at best. All right, before I go on, questions thus far?
What are the docs you need?
I'm sorry?
What are the documents you need?
Not a lot. That's the interesting thing. I am going to have to prove that they've been in business 2 years. Now, that typically is something we will do by going to the Secretary of State and look up how long they've had their business. If they've had an LLC, whatever it happens to be. Some people are strictly 1099 employees. And there shows a 1099 contractor, excuse me, not employee, 1099 contractor. And then they show it on their Schedule C. If that's the case, then we have to have 1099s for a few years. That will, again, we're not worried about the income there. We're just concerned that we can show that they have been quote unquote self-employed for 2 years. Then we're going to have 12 or 24 months worth of bank statements, or in the new one, 3 months, which is like weird. But typically 12 to 24 months of bank statements that we're going to have. This is where it gets interesting. If the person says I make enough money, then what I would generally ask them is for give me 24 months worth of bank statements. I don't know that I'm going to be able to use 24 because maybe the last 12 months have been killer. But the 24 month might show too low. Give me 24, let's see if I can get you qualified because your interest rate's going to be a little bit better on the 24 than on the 12. So I'll look at the 24, but I'll just kill the last 12 if it's not going to put the deal together for us. And I haven't done the 3 months, so I don't know. I just read about that one over the weekend. One of our investors came out with that product about a month ago. Now it does require a higher down payment. Minimum down payment is 25% versus 10% down. So, all right, question before I go on. Anything? Anybody else wondering about this? Okay, my question to you, how do you market this? How do you market this? How do you put this into your mix of trying to attract or find other buyers? How do you use this?
Make a video.
A video? I think that's a good idea. Where else could you potentially use this? I'm sorry?
Facebook.
Facebook possibly?
Email your database.
Your database. See, I think one of the things you can do with this product is, this becomes something, you want to do a video, you want to do whatever, I think that's fine. Mike's a big proponent of that and I support it. I just think this is something you can take to your, if you're keeping a database, which hopefully everybody's got a database. If you are, then what I'm hoping you can do is go back on that database and either just blast it out to everybody or identify those people who are self-employed and say, hey, I've got something I can use for you that I couldn't before, we've got now. Is this something that would help you in the near future or far future, whichever the case is? So there's some real strong opportunities here. And I think that's what I want all of us to be focused on, is it's nothing more than an opportunity. They may never use or need the bank statement loan, but if you and I present it, it might just get us a lead that'll go to something else. You know, Jeff sent me a client over the weekend, and it's very likely that they're not going to qualify into a traditional type situation. And that's okay, because they're so strong financially, they will fit into some type of product such as this. And that's the beauty of having this. Now, these people are super strong. I'm not worried about them being an 05, 06, 07 client. These people are strong. So having something of this nature becomes a benefit so that people that deserve to have this loan can get it. Now, I don't just, maybe this is me personally, I don't want to put a square peg into a round hole. That's not how I see this is intended. This is to serve an underserved portion of our market. That's how this can be used. All right. Now, questions before we depart? And then I'm going to give you one. Yes?
Can people use this for multifamily properties as well?
As long as it's not more than 4 units.
What would make someone who's like otherwise strong financially not able to get a traditional loan and have to go this route?
Great question. Why would somebody not, who's got a lot of assets or everything else? For example, one client, they haven't been self-employed for 2 years. Now, this product wouldn't fit them, but other products would. So just because they're strong financially doesn't mean they necessarily are going to fit into a conventional Fannie Mae, Freddie Mac, FHA loan, because they don't have enough, they haven't been self-employed for 2 years. They, in my opinion, they still deserve a loan if they're strong enough, but I got to find a product to put them into. As I tell everybody, don't go thinking you're going to get a 3% interest rate, okay? It's not going to happen. But you will get a loan, and we'll find it for you.
I was gonna say it could be because they're not showing their income on their taxes, so they can't show proof of income with their taxes. So that's why somebody that has a strong income may not qualify.
Correct.
For a conventional
Correct.
loan.
Correct. They don't qualify because they don't show enough money coming in on their tax return. Although they've got money, they just don't show it coming in on a tax return.
So as far as credit score, are you pulling that off of the business credit or the personal credit?
It's all personal. Credit scores are only personal. We don't look at the business credit.
And would that work for ITN?
I'm sorry?
ITN, would that work for something like that?
Yes. Yep. All right, now, before we break, next week, I said I would not give you everything, but I'll give you just a little tease. The rental product allows for people to buy this potentially without me having to look at their income. Now, isn't that a little bit scary? What's that? All right. Thanks, everybody.